At the beginning of November, I said two things needed to happen for Polestar. They did happen, and Polestar stock is up over 50% since that video. So in today's video, I will look at some reasons for this and why this could continue. I will look at the latest article that shows Polestar stock to be undervalued with strong growth momentum, and I will look at the logic behind a price target that is nearly 300% above the current price. I will explain what sets Polestar apart from all other startup EV companies and what needs to happen next. So if you enjoy my Polestar videos and want me to keep creating regular updates, then can I ask you to smash the like button? By liking the video and dropping a comment, you're letting me know that you want to see more Polestar stock content. I'm aiming to get 300 likes on this video. Help me achieve this goal. Your likes help the channel grow, but it also helps spread the word about Polestar. Subscribe to the channel if you're new and hit the bell notification. Now let's get into it. For anyone who does not know about this company or what makes them such an attractive investment, here is a quick 30-second overview of Polestar. Polestar is a premium electric car brand that was established by Volvo Cars and Geely Automotive. They are based in Sweden, and Polestar designs and manufactures products that are meant to excite customers and at the same time drive change. Along with Tesla, Polestar is the only global pure-play premium electric vehicle company, and they are now trying to achieve net zero greenhouse gas emissions while leading the development of new technologies. Unlike lots of other EV companies, Polestar not only have key partnerships, but also already have global operations with the production and sales of two EVs that are on the market already. Although the Polestar 1 has now been discontinued, the Polestar 3 is about to begin its sales in 2023. This and the stunning Polestar 2 are set to drive sales over the next 12 to 18 months. Now, although this is a startup EV company that only went public earlier this year, Polestar differs from most EV startup companies in many ways. And they had some big news in the past few weeks, which has seen the share price soaring nearly 100% in November, which I will discuss in a moment. This article was written on Seeking Alpha a few days ago and makes a lot of good points. Polestar Automotive, undervalued today with strong growth momentum. It's written here that fundamental change in the automotive industry benefits PSNY stock, while their asset-light model, emphasis on sustainability, and mass production capabilities will be a huge differentiator. Now, I'm not going to go through this entire article, so there is a link to this in the description for anyone who wants to have a read of this in full, but I will just look at some of the main points and give you my opinions, and also talk about some of the risks. So fundamental changes in the industry, such as the move by organizations and governments to implement strict environmental regulations, as well as the ever-expanding charging infrastructure, both drive the adoption of electric vehicles, with premium luxury electric vehicles expected to outpace the growth of other premium vehicles. Polestar had aimed to penetrate over 30 countries by the end of 2023, and they are achieving their targets. But their PSNY direct-to-consumer approach is digital, allowing potential customers to browse PSNY products, configure a vehicle to their own preference, and also place their order online. But Polestar uses an omni-channel approach to allow customers who want to have the feel of their physical products to go and test drive this at a physical location. And from an environmental impact viewpoint, Polestar aims to develop a climate-neutral car by the year 2030. So this company is ticking several boxes from many different viewpoints. But the next points are the biggest in my opinion. Polestar and Tesla enjoy the monopoly of being the only global pure-play premium electric vehicle manufacturers at scale. Now, I know some of these Chinese brands are already manufacturing at scale, but they are focused on the Chinese markets only and do not have global presence like a Polestar or Tesla. Now, this is something that I have spoken about on the channel before when it comes to these new emerging sectors. The EV sector is very new, and when you consider that Tesla would most definitely be the market leader and number one company in this industry, they were founded less than 20 years ago, but they have only really taken off in the past few years. Compare this then with the likes of Ford, which was founded nearly 100 years ago. So when you have these new emerging sectors, there will be a number of new entrants to the market, but only a small few, and over time only a number of these will succeed. Over the past 2 or 3 years, we've really seen Tesla take off, and in China we've seen NIO go from less than $1 to over $60 at one point. For new entrants to match their capabilities, they have to develop core competencies to match the technologies of Polestar, assess vehicle design and manufacturing capabilities, and develop a sales and service infrastructure similar to what Polestar receives from Volvo Cars and Geely Automotive. This in itself is a giant barrier to entry. No other emerging EV company can match this. No other emerging EV company has the support of global recognized brands such as Volvo as a major shareholder. And even last month, when investors started to worry about whether or not Polestar had the finances to place and push forward with their plans, they announced funding to the tune of $1.6 billion from Volvo and Geely Automotive. This is major backing that no other market entrant can rely on. And then Polestar will also be able to rely on Volvo and Geely's manufacturing facilities, which allow them to scale up production at an unrivaled speed while employing an asset-light business model. But now moving on to the all-important valuation and price targets for Polestar. The author of this article suggests a price target of $18 in 2024, which is quite interesting. There have been a few Wall Street analysts covering Polestar in the past few months, and the latest of these price targets was set by Citigroup just a few weeks ago at $12. Now the stock has gained about 50% since then. But the author of this article uses a very simple method of valuation. They have simply taken Polestar's guidance over the next 3 years and compared this with the current forward EBITDA to calculate a forward market value of $38 billion and therefore a price target of $18.24. Now this is a very simple valuation method, and I don't fully agree with this, as it assumes that there will be absolutely zero dilution of the stock. As I spoke about a moment ago, Polestar did obtain financing through Volvo and Geely to the value of $1.6 billion. This is in no ways free money, and we do not know the full details of this, but I do expect that this financing could see a few 100 million shares of dilution. But as I said, we don't know the full details of this, so I won't speculate on this. But what is going to happen next, and what is the driving force behind Polestar's dramatic rise in the past 2 weeks? Before I discuss this, guys, if you watched this far into the video, can you take a moment to help the channel? Smash the thumbs up button and subscribe to the channel if you're new. If you don't agree with what I'm saying in this video, then drop a comment and share a link to something that shows me to be wrong. Since my video at the beginning of November, where I stated very clearly that 2 main things needed to happen, and if these did happen, the share price would rise very quickly, well, both of these have happened, and the stock is up over 50% in that time, so show your support for the channel and hit the thumbs up. And for my viewers who want to support the channel even more, check out my Patreon page where you can support the channel for less than the cost of something like Netflix. And I have recently just set up a new private Discord community, so of course check this out too, with Patreon members getting access to an extra Discord level. Support the channel, check all of this out, and let's make those gains together. As for the main risks to Polestar, this article talks about the reliance on Volvo and Geely and what would happen if they could not maintain these strategic partnerships. However, these companies are the major shareholders in Polestar, so I do not see this as a risk at all. Then there is the high barriers to entry, which I've already spoke about, the exposure to China, which I've spoke about many times over the past year, which although is a real threat, Polestar will eventually be manufacturing their vehicles in the US and potentially in Europe, along with China, so over time this risk will become less and less. For me, one of the real major risks in investing in Polestar is their ability to hit their targets over the coming year. As I have said in plenty of previous videos, they need to hit their sales and production targets in order to maintain investor confidence and to head towards break-even and potential and eventual profitability. Polestar had estimated sales of 29,000 last year, which they achieved. They set guidance for 2022, originally at 65,000, but supply chain issues caused them to change this back down to 50,000, which the company maintained they will achieve despite only producing 30,000 vehicles in the first 9 months of the year. Now, the slow speed of their production over the first 9 months of the year helped to drive down the price of Polestar stock. But then 2 weeks ago, Polestar sent the stock price soaring when they tweeted out a picture of their 100,000 Polestar 2. This would mean that Polestar have produced far above and beyond their 50,000 vehicle target for 2022, but also hints at a massive increase in production capability and demand for vehicles, which is huge for the company. Now, I said this in October's video, and I doubled down on my opinion in that video at the beginning of November. If Polestar could obtain the funding that they needed and they hit their target of 50,000 vehicles, then the share price would go up quickly. I think I stated that I thought Polestar needed about $1 billion, but they have actually got $1.6 billion, so that should be more than enough to see the company through to profitability, which the company should be able to hit in 2024. Then I said that if Polestar could hit 50,000 vehicles this year, that would be a signal that they can scale up enough in order to hit next year's targets. After all, Polestar's production targets for 2022 and 2023 is far higher than any other EV stocks out there. If they can hit 20,000 vehicles in Q4 this year, then I feel that it is quite likely that they can hit their target of 120,000 vehicles in 2023. But the company tweeting that they have produced their 100,000 Polestar 2, this suggests that the company is producing at an even greater rate than was anticipated. Hence, the share price has begun to rise up rapidly. So guys, if you would like to see another update video where I look a bit closer at what this could mean for Polestar and how beating their production targets could affect the company's growth and expansion and ultimately its profitability and share price, then drop a comment below, like the video. Or would you like to see a comparison video between Polestar and any other EV stock such as Tesla or NIO? Drop a comment and let me know what you want to see. But remember that the content of this video is mainly my opinion. I am not a financial advisor and this is not financial advice. I highly recommend consulting a financial advisor before investing in any stocks. Anyways guys, like and subscribe and I'll catch you in the next update.